Okay, I'm hoping the audio is coming through here. It looks like we're having some issues here with the audio. So if anybody out there can hear me, I know we got a couple of folks hanging out. If you can, maybe go ahead and pop that into the comment box before I continue here, because I want to make sure that y'all can hear me as we go over the material. I'll just kind of give that a second. Was just going over Tesla here, up 62%. 62% today from October 29th of last year. October 29th of last year. That being Tesla. So that's very hot. Very, very hot. Another thing I want to look at today, we gotta look at the S&P here. We got to look at the S&P. S&P pressing into all-time highs as we speak right now, all-time highs. That's got to be noteworthy. That's got to be noteworthy. Okay. I mentioned earlier the big story right now, just to get it out of the way at the beginning, I said, we're always looking here on Stock Talk for just one main news item, right? There's so much financial news. I say that every week because it's true. So what do I pay attention to as a trader? Well, really just one or two major things right now being earnings. I mentioned that on Tesla. Tesla obviously just having earnings, giving it a significant boost. It's already doing really well. It continues to perform. And so earnings being a big factor there. Well, that's what Wall Street's really been watching. And this week we had some big earnings reports, some major ones yesterday we're going to talk about in a minute that have missed. Okay. We had a lot of positive, strong earnings, but definitely saw some missed earnings yesterday. I'm going to talk about that, like I said, in just a sec here. But there's enough positivity out there for sure on that narrative to lift the market. Notice how Wall Street really focuses on what they want to focus on. There's plenty of economic headwind, right? We've seen volatility and sell-offs in the market due to high inflation. Well, we still have high inflation. In fact, we have very high inflation. They don't seem to mind that right now. Companies are reporting earnings and saying, hey, we're making money. In some cases, record profits for these companies. So that's really giving a boost to Wall Street right now. Longer term, I definitely am keeping in the back of my mind the concerns I have about this economic situation that we find ourselves in. But the chart continues to move up and continues to move up very strongly. A little bit of a sell-off 2 days ago, moving down into the 5-day moving average, but that's about it, right? Couldn't do much more than that, and bam, I'm going to zoom in a little bit. It's just taken off from there and now breaking into all-time highs. So as that narrative of earnings, like I just mentioned on Tesla, continues to come forward, those industry leaders, those big stocks, those big names come in and they're positive, it's driving the market up. So here we are back into all-time highs, okay? Going to close out the week here, likely to push up a little higher if that narrative can continue. And then we need to be patient. We need to say, okay, this thing needs somewhat of a rest, right? Kind of like what we got 2 days ago. Somewhat of a rest, pull back into a support area, and then we can look for some more opportunities. Again, not talking about long-term investing here, short-term trading, okay? So totally different. That being the S&P, but look at this. 1, 2, 3, 4, 5, 6, 7. The 8th day, pretty flat, right? But 7 straight days in a row and not really looking back too much from there. So the S&P also looking really good. If I jump on over here, look at the NASDAQ, boom. Again, today, all-time highs, okay? Gets into this downtrend, breaks the trend, and then just takes off. So the index is looking really strong right now. The challenge there, of course, is at this point in a run like this, do I get in the market or do I need to wait for it to pull back, right? And so at Tradeway, we're teaching different approaches to be able to navigate that kind of a question. What should I do? How do I protect my money but still be a participant when I see this kind of movement? That, again, like I said, not the long-term buy and hold, but the short-term trading, that is the skill set that we teach here at Tradeway. Again, I just wanted to throw it out there. I see some comments that people were not able to hear. So if you're with me today, go ahead, pop in the comment box there, YouTube, Facebook. If you can hear me, I just want to make sure that the audio is okay. Everything is coming across as we continue on here. Now, I mentioned some big earnings misses. Well, here's what I want to show you on this chart. Apple yesterday, okay? Apple doing well going into earnings today, dropping, right? It closed up here at 152 and it opened down here at 147, okay? So not a massive drop. This isn't a huge drop by any means. But what I want to highlight is they reported earnings after the bell. Once the market was closed yesterday, it drops down. But here's the one thing I find myself reminding myself and also telling Tradeway students, anytime there's a sell-off, okay, what happens is a lot of negativity, right, comes into the market, both in the news, in the chart, and at some point, the minds of investors and traders, right? The environment becomes very negatively charged. But what's interesting about that is that if we can remain, as David Mitchell likes to say, contrarian, right, at least to some degree, then we keep our minds ready for what is likely to come, which is a recovery, right? A strong recovery always comes after a drop. Now, that sounds like an obvious statement, but markets have to drop for that to happen. And if they drop, we tend to get into a selling negative mindset. We become gun shy. We don't necessarily have a skill set to say, okay, but when can I get in and watch for a signal to get in if the market's selling off? Let's go back here quick. Okay. Here the market is dropping, right? It's dropping very negative, and yet, boom, there's this big bullish run. Now, I'm not saying we're always going to catch the bottom of this run, right? I'm not saying that today. But I am saying that we ought to be ready, even if it was this day right here, right? I'm not saying we go and just jump in, but we ought to be ready and say, you know, the market's falling. Now, it may continue to fall. We don't know. But because it's been so hot, and bull markets don't die easily, they do not die easily. You ought to be ready. You ought to be ready for a recovery, right? We ought to be ready and learn, what do I need to watch for? What do I need to know? Because we can show you some simple things that help you know when the market is recovering, and then how to protect your money and still trade in that environment. So if we go to Apple, here's a good example, right? Here's a good example. The earnings report missed, right? It drops down, but what does it do? It goes and it hits the 50-day moving average. Okay. Now, we would have to, admittedly, in this case, we'd have to be interested already in Apple, right? We'd have to be watching it this morning. Okay. But the point is that the stock drops on earnings. It's negative. It's moving down. This morning, this was not a green candlestick. This was a red candlestick. But what do? We see, oh, it hits the 50-day. That's a significant level for Apple, right? Apple's a very popular and hot stock. It misses on earnings, and that sets it up. So if any time there is selling or negativity, it causes us to disengage from the stock completely, meaning we're not watching it. Well, then we find that we will probably be missing a lot of opportunities. The reason is because that negativity is what brings it into support. And in this case, the 50-day moving average was support and getting a nice strong move up from that level. So yes, it missed. Yes, I've put it under my not hot list, but really this is something that I want to highlight where that's how we see stocks set up. So we do need to have a little bit of that contrarian view. Moving on, I also just want to highlight this because this was one of the big misses, right? Not a huge drop here for either Apple or Amazon, but Amazon also missing on earnings. Okay, so that was obviously the news item here. And anything that happens with Amazon stock is pretty much becomes newsworthy in the stock market. So Amazon definitely in the news somewhat there. Now, I do want to go and just review a little bit of what I said earlier, because I think, as I mentioned, there's some sound issues there and folks were not able to hear that. So Tesla up 62% year over year. Okay, that's a 62% increase in 1 year. But this isn't new, right? This isn't new that this has been really hot. Let's go back here. Let's look at this right here. This is November of 2020, okay, trading at $400. What do we got here? January 27th, just over 2 months later, trading at $900, okay? More than doubling in just 2 months. Back here, not so long ago, March of 2020, trading at $71. $71, and now trading at over $1,100 a share. So very high. And I also mentioned, we are short-term traders. That's the skill set we teach. Now at Tradeway, we do long-term investing, but Stock Talk Thursday, we focus on the short-term trading. What does that have to do with Tesla? Well, when you look at long-term buy and hold investing, there's something called fundamental analysis. Now, before anybody falls asleep on me, fundamental analysis is sort of like if I go to the doctor and I'm saying, Doc, I don't know how healthy I am. Am I healthy? Am I not? Let's do a checkup. Well, what are they going to do? Well, they're going to ask you questions, right? How are you sleeping? How are you eating? How do you feel? Right? We're going to do some blood work. They're going to do all kinds of tests. Some tests, some doctors may pay more attention to. Some doctors may pay less attention to others, right? There's different factors. It's the same thing in the financial business world. Companies can have checkups, and the tests that are done to see how healthy is this company, right? I want to know, I know what it looks like on the outside, but what's going on the inside, right? That is fundamental analysis. It's all kinds of tests and metrics to say how healthy is this company. Now, what's interesting, I want to highlight this about Tesla. One of those metrics that is used is to say how valuable, or let's compare the value of the shares of a company to the actual value of the assets of that company. Okay. In other words, if XYZ stock was worth $100 million, okay, and they had 100 million outstanding shares, it would stand to reason that you simply need to divide the value of the company by how many shares there are to find out what each share should be worth, right? The shares are simply a piece of the company. So shouldn't the share price, the share value, be the same or at least close to the actual value of the company? Well, because we trade shares on an open and free market, that's not necessarily true, right? You and I and Wall Street are free to speculate on the future value of a company. If we want to buy the shares at any price, we can. It doesn't necessarily have to have anything to do with the actual value of the company. Now, what's interesting about Tesla is that if you look at this metric, okay, which is basically a price to earnings ratio, or it could be a price to book ratio. What's the value of the company itself? We can compare share price to what the company's making. We can compare share price to how valuable that company is. And this is something, as I mentioned, that long-term investors look at to say, how healthy is this company and how much risk am I taking if I'm buying these shares? Because if the company's price or value doesn't really match up with the price of the shares, then why should I buy it at this price, right? Why should I buy it at this price? In the case of Tesla, there's a lot of speculation, right? That Tesla is just going to continue to grow enormously. Now, let me give you a little bit of a basis of comparison. Toyota, we've all heard of Toyota. Generally regarded as, I read one quote, the cream of the crop among traditional car makers, okay, in this industry. This ratio that I'm talking about says that their shares, I think this is as of October 21st. Their shares traded at 9.5 times, right? The share price traded at 9.5 times the value of the earnings, right? So this is the money they're making, and their share price is 9.5 times higher. Okay. Tesla is currently trading at 111 times their earnings. 111 times their earnings. Based on what? Based on what investors think Tesla is going to do in the future. So it is way, way up there. You say, Blair, does that not create risk for us if we buy a stock that is so intensely outperforming the value of the company itself in terms of the assets or the amount of money it's making? Yeah, there is. There is risk in that, right? There's risk of a bubble, but Tesla continuing to perform, investors happy to pour into the stock, continuing to do that. So for those of you that missed in the beginning due to some of the sound issues, I wanted to recover that so that you guys had that information. Tesla, very hot. Earnings in the news, couple of misses out there, but always an opportunity, or at least always an opportunity to watch and see, because negativity and sell-off is exactly what brings the stock into support, right? Profit taking brings the stock into potential support. That's what we want to watch for. Stock Talk Thursday in the open market here on Friday. Appreciated you guys being with me. Apologize for some of the audio issues. I know some of you couldn't hear. This is recorded, so we're going to go ahead and edit any issues out of this. And you can send this on over to some friends. If you have anybody out there that you know would like to watch this, you can tag them, send this on over to them. Of course, you can always watch all of our episodes posted right there on YouTube. Like and subscribe. You can head on over to tradeway.com. If you haven't ever taken our Step 1 Start Your Journey course, that's how you learn our stock trading system. Spend a couple of days with us, get to know us, let us get to know you, and learn how we make buying and selling decisions for short-term trading. Appreciate you guys. Thanks so much for being on, and we'll see you next time.